Hey everyone, hope you're doing well. Today is December 5th, 2025, and Cardano's ADA is making some serious moves. I woke up, checked the charts, and holy guacamole, ADA was pumping. We're talking about nearly a 4% surge in price, shooting up to a fresh weekly high as it inches towards that big 60-cent level. After days of pretty boring sideways action, it's like ADA had an espresso shot and said, all right, time to wake up. Now, a 4% move might not sound like a moonshot, but it's a big deal in context. It's reviving short-term, bullish momentum and putting Cardano back in the spotlight for traders. So what's going on? Why is ADA suddenly perking up? And what's the strategy here as we eye the 60-cent mark? Well, I've been digging into the data and it turns out there's a whole lot happening under the hood. Think of it like this. Cardano's been driving uphill in a clunky old truck for weeks, but now the engine's finally revving. We've got multiple cylinders firing from trader sentiment to on-chain volume dynamics to good old technical chart patterns all aligning to give this move some real oomph. First off, let's talk sentiment, basically how everyone feels about ADA lately. And here's a plot twist. For once, the retail crowd, us normal folks, and the so-called smart money big players are on the same bullish page. I can't overstate how unusual that is. It's like seeing cats and dogs form a team. Crowd sentiment has actually flipped positive, and the whales institutions are even more bullish than the little guys. Usually those groups rarely agree, but now both are nodding and saying, yep, ADA looks good. That unified shift suggests growing confidence in ADA around this support area. In plain English, people with deep pockets and people with shallow pockets both think ADA is a bargain here and likely to go up. Now, sentiment alone doesn't guarantee anything. Crypto markets can and will do their own thing, but seeing everyone feeling optimistic together definitely reinforces the improving structure we're seeing on the charts. It's a bit like if all the fans of a football team suddenly started cheering in unison after a long silence. The energy comes back, and the players, in this case, the price, feel that support. All right, enough about feelings. Let's get into some data goodies. One metric I love to watch is something called CVD, which stands for Cumulative Volume Delta. Fancy term, I know, but stick with me. Basically, it looks at market orders or takers and tells us whether buyers or sellers are more aggressive. A taker by CVD going up means buyers are throwing punches harder than sellers. And guess what? That's exactly what's happening with ADA. The taker by CVD for Cardano has been steadily rising, showing that buyers have been absorbing the sell pressure for the past 90 days. Yes, even while ADA was stuck in a rut, drifting inside a falling price channel for weeks, some strong hands out there kept on lifting the bids instead of backing off. It's like the bulls were quietly bench pressing heavier and heavier weights while the bears were getting tired. This kind of buyer dominance often happens right before a relief rally. It's like a telltale sign that the bulls are gearing up. In fact, when an asset's price is near a strong support, which ADA was, and you see buyers consistently absorbing sellers, it often precedes a bounce. It's almost as if the market's saying, all right, we've absorbed all the selling you got, now there's nowhere to go but up. If you take a look at the CVD chart here, you can see that steady upward slope that's buyers flexing their muscles. The green line representing buy volume keeps climbing, meaning buyers are not letting the sellers push the price down without a fight. They're effectively acting like a giant sponge, soaking up all the sell orders. This adds another layer of justification for an upside attempt because it shows confidence traders are willing to keep buying even when prices dipped. The improving order flow profile is boosting the bullish case, no doubt about it. Next up, let's peek into what the big dogs are doing on the futures side, specifically Binance's top trader long-short ratio data. Don't worry, it's not as confusing as it sounds. Exchanges often publish what percentage of their top traders are long versus short on a coin, and right now for ADA, about 70% of those big shot traders are long. That's nearly 7 out of 10 top traders betting on ADA's price going up, not down. Think about that for a second. When was the last time you saw that kind of agreement among top traders? It shows a pretty decisive tilt toward bullish expectations. It's kind of like in a schoolyard dodgeball game where you notice all the strong kids mysteriously ended up on one team. You'd wager that team is about to win. On this graphic from CoinGlass, you can see the overwhelming green portion representing those longs. That bias often appears when traders anticipate a rebound is coming. These folks are positioning themselves to catch an upside move. What's even more interesting is when this long bias really picked up steam. Apparently, the ratio of longs was increasing even before ADA's price actually bounced in the last day or two. So these traders were forward-looking. They saw the writing on the wall, be it the sentiment shift, the strong support level, or that CVD action, and started loading up early. That steady increase in long positions ahead of the price move strengthens the signal's importance because it suggests those in the know had conviction. It wasn't a random spike, it was a build-up. And the fact that this aligns with everything else, the bullish crowd sentiment, the whales being bullish, the CVD showing buyers in charge, it all comes together like pieces of a puzzle forming a bullish picture. When multiple independent metrics all point in the same direction, you pay attention. I always say it's like a confirmation chorus. One indicator singing is just noise, but get a few of them in harmony and you've got a song worth listening to. Right now they're all kind of singing ADA's looking bullish in unison. Now let's talk about the price chart itself, because at the end of the day, that's where the rubber meets the road. ADA has been stuck in what we call a falling channel for quite a while, basically a downward sloping range that's been corralling the price. If you visualize it, it's like ADA's been sliding down a gentle kid's slide fun for the bears. Not so much for the bulls. But here's the thing, ADA recently bounced off the bottom of that channel around the 37-cent region, which has acted as a support. It's as if ADA hit the floor and said, okay, that's low enough for now, and now it's climbing up, attempting what could be the early stages of a breakout from this channel. Now, if I bring up the chart here, you'll notice the price reacting at that lower boundary and curling up. There's even a MACD indicator starting to curve upward, an early sign that momentum is improving. This early uptick doesn't confirm a full trend reversal yet, but it definitely highlights growing strength. With this bounce underway, the immediate technical target I'm watching is the midpoint of that falling channel, which sits around 5.341 cent. Why that specific number? Well, it's roughly the middle of the channel's range, and mid-channel levels often act like interim resistance during channel breakouts. In other words, if ADA keeps pushing up, around 53 cent is where we might expect some turbulence, or at least a pause. Cardano aiming for that mid-channel area aligns with all the positive sentiment and CVD data we discussed, making this rebound attempt even more meaningful if it can get there. If the bulls manage to smash through that mid-channel zone, then the top of the channel and maybe beyond comes into play. The channel's upper boundary is right around that psychological 60-cent level, which is why everyone's eyes are glued to it. Breaking out of the channel altogether would be like ADA finally escaping the price prison it's been stuck in for months. Now, Before I get too carried away with visions of a Cardano breakout party, let me slip in something very important. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Whew, okay, had to say that. Basically, don't go YOLOing your life savings on ADA or any coin just because I'm excited about some chart patterns. Be smart, be safe. With that reality check out of the way, let's get back to the fun stuff because honestly, the data is exciting right now for ADA. We've covered sentiment, CVD, futures positioning, and the chart setup. There's one more piece of the puzzle that's been quietly giving the bulls an extra edge. Liquidations. If you're not familiar, liquidations are what happen when leveraged traders get wrecked. Their positions are force closed by exchanges. In this context, we're interested in short liquidations, meaning people who bet against ADA's price, short sellers, got caught off guard when the price went up. And oh boy, a bunch of them did. During ADA's latest move up, we saw an increase in short positions getting liquidated across major exchanges. In simple terms, shorts were losing more money than longs were on those days. If you glance at this liquidation chart, the red bars representing shorts getting clobbered shot up relative to the green bars. Those red spikes are basically short saying, nope, can't take the pain, I'm out. This confirms bears got overconfident their forced exits, basically poured fuel on ADA's rebound. Why does this matter? Because when shorts get liquidated, they actually become buyers. Their positions close by buying ADA back, and that adds fuel to the rally. It creates a cascading effect. Price goes up a bit, some short positions hit their stop loss or liquidation point. Those shorts buy back to cover. That pushes the price up more, which might trigger more shorts to liquidate and so on. It's like throwing gasoline on a fire for upward momentum. Now, to keep it in perspective, the recent short liquidation spike wasn't some record-shattering short squeeze, it was modest compared to past instances. We're not talking billions of dollars in shorts getting annihilated or anything, but even a modest imbalance where more shorts are getting wiped out than longs helps the bulls, especially at a critical turning point like this. It basically showed that the bears got a bit too confident and overextended, and when ADA's price popped up, they had to scramble for the exits. That extra boost from shorts covering gave ADA's bounce a bit more juice right when it needed it. Historically, when you start seeing a rise in short liquidations at a major support or bottom area, it often lines up with the beginning of an upward trend shift, and it looks like ADA is fitting that pattern right now. So, to sum up this whole picture in a story, it's as if Cardano was a spring coiled up for weeks. Sentiment was meh for a while, price was languishing in a downtrend channel, and everyone was waiting for the next shoe to drop. But under the surface, quietly, the smart money and the everyday traders both started turning bullish. Imagine two rival sports fans suddenly cheering for the same team. Weird, but it's happening. Meanwhile, the bulls were stealthily soaking up sell pressure. That's our CVD hero doing the heavy lifting. The big traders positioned themselves long, locking and loading for a move up. The price hit the bottom of its channel and said, yep, I'm done going down. And then the match was lit. ADA pops up %, short scramble to cover, and now here we are looking at a coin that suddenly has a bit of swagger in its step. Now, let's talk strategy, because this isn't just a data dump. It's about what one might do with all this information. If I am an ADA holder, and full disclosure, I even run a stake pool for ADA, but more on that in a sec, This is the moment I've been patiently waiting for. The indicators are aligning like never before in recent memory. However, it's important to stay level-headed and not get swept away by euphoria. The prudent approach for many would be to watch if ADA can hold above its newly gained support levels and actually push through that 53.60 zone with conviction before declaring victory. Often the first test of a big resistance, here 60 cent, can lead to a pullback. So I wouldn't be surprised if we see ADA touch, say, 58 cent or 59 cent, and then maybe cool off a bit on the first try. That's normal market behavior. Nothing goes up in a straight line. The key will be that if we do get a pullback from just under 60 cent, we want to see higher lows afterward and buyers stepping in to defend levels like the mid 40s or 50 cent area. That would show that this bullish momentum isn't just a one-time fluke. For shorter term traders out there, some might be eyeing that mid-channel target, approximately 5,341 cents, or just under 60 cents, as a spot to take a little profit off the table given it's a known sticky zone. I mean, I can't blame them. Resistance is resistance until proven otherwise, and 60 cent has been like a brick wall for aid in recent memory. If I were trading actively rather than mostly hodling, I might trim a bit of my position around those levels and then watch how the breakout attempt plays out. If ADA then blasts through 0.60 on strong volume, I could always re-enter or add on the retest of that level as support. There's no one-size-fits-all game plan, though. Everyone's strategy and risk tolerance is different. The important thing is having a strategy. Know your targets for taking profit. Know what point would invalidate your bullish thesis. For example, if ADA falls back below 42 cent, then this breakout failed. And don't let emotions override your plan. Now, for the long-term ADA believers, I count myself among them too. This short-term action is exciting, but it's mostly just noise in the grand scheme. If you think Cardano is going places in the next few years, seeing it wake up now is encouraging, but it doesn't drastically change the big picture you were probably holding and staking through the doldrums anyway. Speaking of staking, here comes that shameless but important plug. If you're holding ADA and you're not staking it, you're missing out on some sweet passive rewards. I actually run the cheeky ADA stake pool, ticker symbol CHEEK. It's one way we ADA holders earn a little extra on the side just for supporting the network. The cool thing about staking Cardano is that it doesn't lock up your funds. Your ADA stays in your wallet and you can undelegate or move it anytime you want. It's not like those sketchy platforms where your crypto is stuck for months. You can literally switch pools or withdraw your ADA whenever with no penalty. It's as easy as a few clicks. So if you want to join me and the community in earning some passive ADA while we all ride out this market, consider delegating to the Cheek pool. It's simple, there's no lock-in, and you can hop pools anytime if you change your mind. All right, back to ADA's immediate outlook. This video is going out on December 5th, 2025. So if you're watching on that day, you know the numbers might have wiggled a bit by now. That's just the nature of crypto. But the core idea here is that ADA has rekindled a short-term bullish flame. We're testing the waters above what used to be a stubborn resistance, and all the signs are pointing to the bulls having a real shot at pushing this higher. If momentum continues and we get through 60 cent with confidence, ideally on strong volume and maybe a daily or weekly close above it, that would be a big bullish statement. It could open the door to higher targets, maybe the mid 60s or even 70 cent as the next areas of interest. However, if 60 cent proves to be a hard ceiling again, we might see ADA spend a bit more time bouncing around in the upper 40s to low 50s, consolidating and gathering strength before another breakout attempt. Keep an eye on the broader market too. If Bitcoin or Ethereum decide to take a nosedive out of nowhere, ADA will likely feel the drag in the short term. That's just how crypto works. Most altcoins are somewhat tethered to big BTC moves. But absent any beat drama, Cardano's got its own fire going right now. The alignment of bullish sentiment from both retail and whales is a rare green light by itself. The order books show buyers firmly in control. The big traders are all in long, and shorts already got a slap on the wrist. It's like all systems go for the time being. To wrap this up, I'll leave you with this thought. In crypto, momentum can shift on a dime, but right now, ADA's momentum has undeniably shifted to the upside in the short term. It's upbeat, it's exciting, and if you're an ADA holder, it's the kind of price action that puts a grin on your face, at least for today. Just remember to stay grounded, use data and facts, like the ones we went through, to guide your decisions, not hype alone. Days like this are why we hodl through the tough times. So enjoy the ride, but also plan your next moves wisely. I hope you found this breakdown both educational and entertaining, maybe even a little ADA-spirational if I may. If you did, smash that like button and subscribe for more crypto content. Oh, and join us in the free Discord for a chat. And let me know in the comments, do you think ADA will smash through 60 cents this time, or are we going to hit that wall and retrace again? I'm super curious to hear what you guys think. As always, thanks for watching, stay cheeky out there, and until next time, happy hodling everyone.